Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Wednesday. In today's program, I want to briefly discuss two earnings reports which was released after hours yesterday, plus a couple of other things going in the market as we build up for potentially a massive event happening tonight. But before we get into that, don't forget, these little programs or these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. So I've named this little video, L stands for lackluster. And the reason for that is that Alphabet released its Q2 earnings after the market closed yesterday. And it was quite a mixed bag. And I'll tell you why it was quite a mixed bag. First of all, there was a lot of tension on ad revenue. Because don't forget, last week we had both Snap Incorporated and Twitter released their earnings, and it was very disappointing because it showed signs that their online ad revenue was dropping. However, Google announced its ad revenue was better or slightly better than anticipated. It actually came in at 56.29 billion versus 56.14 billion expected. So that was slightly better. Service revenue, however, disappointed. That was announced at 62.84 billion versus 63.34 billion. So the one thing the market was worried about, which is the online advertising, which clearly was showing a slowdown with the likes of Twitter and Snapchat. Google did quite well at, but the service revenue was slightly down. Overall revenue for the report came in 30% up year on year, which, okay, it's 30% increase. However, this is why it's a mixed bag and a bit of a lackluster. If you compare it to the same period, last year, it actually was 62% last year. Growth was 62%. So it is slowing, a bit of a slowdown in growth. And don't forget, Google has announced that it will be slowing down on its hiring. So like many companies have said this, Apple have said this as well. So not bad, but still slightly worrying. In general, though, the stocks jumped up in the after hours trading by 4%. However, if you look at the bigger picture, Google's share price has fallen roughly by 27% so far this year. So, like I said, Alphabet, bit of a mixed bag in general. Microsoft also announced their earnings yesterday after the market closed, and that was disappointing. Its revenue was announced at 51.9 billion versus 52.4 billion expected. Microsoft blamed the war in Ukraine, the foreign exchange rate environment, the higher dollar, and the COVID shutdowns in China for missing its target. Since the beginning of the year, Microsoft's share price is down by 23%. So again, like I said, the overall picture, Alphabet mixed, Microsoft down, but we are keeping into this slowdown in growth across the board in these earnings reports. Next up is, of course, Meta, Facebook, and they're expected to announce their earnings around later today after the market close. So that will be a big thing indeed to keep an eye out for. So there we go. The earnings season is fully upon us and in full swing. Sorry, my throat's a bit dry. In other news, the German consumer confidence came in today, and it was announced at negative 30.6 versus the expectation of negative 28.9. So again, higher than expected. So not a very nice picture in Germany. In fact, Klaus Müller, who is the head of the German gas regulator, warned today that the consumers must prepare for more energy price increases. So again, of course, this is on the back of the Nord Stream 1 drama as well. As the market stands at the moment, is currently on a knife's edge because we have a massive event happening tonight. And that, of course, is the FOMC interest rate announcement. Will it be 75 or will the Fed surprise the market like they did last time? Now, I think personally, I think it'll be 75. The reason why I say that was last time they raised rates, the market initially anticipated a 50 basic point rate hike. But then a couple of days before the announcement, the article was leaked in the Wall Street Journal saying 75. So it was like they were trying to prepare us for it. So anyway, let's have a quick look at how the market stands at the moment. Right, this is, first of all, of course, the euro, who came under pressure yesterday because of, obviously, the gas drama, like I was talking about. At the moment, as I expect it to be, is fairly range-bound, currently trading at 1.01473. I do expect it to be range-bound pretty much throughout the most of the day till we find out what the Fed announcement is. So bear that in mind. If we look at the cable again, okay, yes, it is above that key level. So it is favoring better than the euro against the greenback. But still, I do tend to feel it's going to be range-bound again as the market will wait for the Fed later tonight. Currently trading at 1.20608. Let's look at, as well as that, let's look at gold, obviously. Gold, okay, still under that key level, 1,727. Same as everything else in the market today. I do expect it to be fairly range-bound till we know what's happening with the Fed interest rate decision later tonight. However, we have got a couple of other major events coming up. Don't forget. We have got, obviously, US durable goods today, which will be interesting to see. But really, it's all about that interest rate decision later tonight and the monetary statement. But as well as that, to come this week, German CPI, US GDP, German GDP, EU GDP, and EU CPI. Sounds like I'm doing a rap there, doesn't it? As well as that, other earnings, we have Meta, Apple, and Amazon still to come. As the market currently stands, we have the FTSE currently up 0.40%, DAX currently trading higher at 0.42%, and Eurostoxx 50 currently trading at 0.60%. So there we go. Slightly tepid, as we would expect. Usually is the way when you have such a huge event happening in later hours where the market tries to position itself for any surprises. Don't forget, you can ask me questions anytime you wish, whenever I'm online. This is what I'm here for. And don't forget as well, I will be back online again at about 1:30 p.m. UTC. We're doing a preview of the FOMC announcement. We've got a bit more detail why this is such a key event. Plus tonight, I'm doing a special. Why not? I'm doing a special because this announcement could potentially be so massive. I will be doing what I'm going to call a market mover video. And again, it will be live. It will be sort of like a watch along, but not quite like a watch along because I won't be in my studio. I'll be actually at home doing it. But I'm so excited. I'm going to be doing it anyway. So please come along and join me for that event. Anyway, if there is no further questions, hopefully I'll see you again later this afternoon at 1:30 p.m. UTC. Don't forget, like I always say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this episode, by all means, subscribe, hit the notification button so you know next time I'm going live. If you found this video interesting and you've put up with me, my over-the-top enthusiasm about the markets, which I just simply can't help because I love the markets, then give me one of these. It's nice to know that you like what I do. But anyway, till next time, or till later this afternoon, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.